Hi, good day. Today, what we want to discuss on our compliance section is the tax compliance for businesses within South Africa. So this is just going to be a sort of bird's eye overview of how the tax compliance work for businesses within South Africa and what kind of tax types do exist. I think the first clarification that I just want to bring is that there's a difference between the CIPC returns and the SARS Tax Returns. The CIPC returns is what a business paid towards CIPC every year on the business's anniversary, and it's an admin fee that goes to CIPC. The SARS Tax Returns, on the other hand, has to do with the profit and the turnover of the business, and the business then paid tax on the profit that has been generated for that year. Now, the first type of return for a business within South Africa is the return that they pay on the income, the turnover that they generate within the business. That you pay end of August of every year, end of February of every year. So you have your provisional cycles, which is end of August and end of February. And then SARS will give you approximately 6 to 9 months to file the actual return. After that, some businesses file the actual return when they do their second provisional returns. And so that is on the income tax. And so that how that works is every business is obviously the turnover, that's income, the revenue. Then it also have expenses in that business, direct expenses, indirect expenses. And then what is after the expenses, what's in the business, that is what is the profit, and that is what the business usually pay, or what the business pay tax on the profit, not on the turnover. It's after the expenses. The other type of tax that's in a business is the payroll tax. The payroll tax is the tax that the business pays, for instance, like pay as you earn, and that is on the salaries that the business pay towards those that work for the business. Now, there's different salary brackets. That's another lesson that we will look at. But for now, we just want to look at the different tax types. Then, third tax type for the business is VAT returns. That is, if the business is registered for VAT, then the business have to file VAT returns. VAT returns is usually on a 2-month cycle. When the company is registered for VAT, SARS would have given the company a cycle of every 2 months, and then it has to be filed every 2 months. Just to go back with the payroll tax. The payroll tax that I just talked about is monthly. So SARS call it EMP 201. So if you have employees, you file that monthly, and then there's an EMP 501 which is filed yearly. So sorry that I had to go back to that, but I thought it would give clarification that there is a monthly. So the income tax is twice a year. The payroll tax is monthly. The VAT returns is every 2 months if the company is registered for VAT. I think that is all that I want to just mention in terms of the tax returns for now. Of course, for bigger companies, there's other things we can go into, but for normal small SMEs, those are the basic tax types in the tax returns that's filed, in the different types of tax that's filed for small to medium-sized enterprises. I hope that is helpful. If there's any questions, any comments, leave it in the comments, and we will make sure that we address that to you as soon as we can. All right, thank you so much.